Next others. If I'm going to grant credit sales, what would the benefit?
Sir,
Yes.
sales volume will increase, sir.
Very good, Girija. Okay. I am granting credit. Then what would the expectation? Sales will get increase. Am I right? Any business for that matter. I am conducting coaching class. Here, yes, Kana. Here, instead of paying the entire amount fee, you can pay installment. It is equal to credit period only, no? Okay. Then what is the intention begin the same so that more admission will be there. I am selling the product. Today you can buy the product. On or before 30th day, you have to submit settle the money. Then what? Many customer I can get. So that ultimately sales will get increase. Whenever you come across credit granting decision, the important terminology. For example, 2/10, net 40. 2/10, net 40. Before that, what is called net to 40? Many occasion, post exam question, MTP, RTP, including post exam question, we have come across. Sometimes net to 40. Number is not important, maybe 40 or 30, okay? Or 2/10 or 3/15, something will be there, okay? So, first we can discuss what is called a net to 40, net 40. Harish. Question have you seen this question or not? Nobody test RTP, MTP, post exam questions, including our ICA material is there.
Tax.
What is net 40?
Like after tax.
Oh, what is this, Priyadashini? We are talking about the credit sales pathina question.
A discount and credit
No.
period.
Net 40. No. 40% discount with another.
Days, sir.
Prem Kumar. Very good. Yeah, Prem Kumar answer is correct. Prem Kumar. Very good, Kana. The full answer is correct. Clear? Others also kindly text to participate. So, net 40 represent what? Today you can purchase the product. On or before 40th day, you have to settle the money. 40 நாளுக்கு கடன் பீரியட் சொல்றோம். கடந்து வியாபாரம் பண்றோம். எப்ப செட்டில் பண்ணணும் தெரியும் இல்லையா? I am granting credit sales. When we have to repay, that period is called net to 40. It may be net 40 or net 60 or net 50, depending upon the competition. If I am granting net 40, my competitor is giving net 50, where the customer will go? My place or
Net 50.
This place.
Competitor's place, because 50 days credit period, I am giving only 40 days. Therefore, based on prevailing market trend, I have to fix the credit period. Are you with me or not? Understood? So, you understood what is called a net to 40. Now, extending the terminology. Okay? Premkar already told the answer. Others also can try. 2/10 net 40. This is the meaning. Because many students, for your kind information, many students, because of this one line item, not even full line, because of in one this segment, 2/10 net 40, he is not able to understand what is that meaning. The entire problem he is not able to attend in the exam. Pathetic for 10 mark. Since you are not strong in the concept, you are going to lose the entire 10 marks. The entire problem you are going to omit. So conceptually you should be strong. So 2/10 net 40 represent what? What, Sukumar? You are in happy mood. Tell me. 2/10 net 40 represent what? ஒன்னும் படிக்கல. What is this?
Sir, if settle within 10 days, then 2% discount would be given.
Very good, Kanna. Padambari, keep it up. 2/10 net 40 represent. Today you can buy the product on or before when you have to pay the money? 40 days. Okay, it's a credit period. But if you are going to pay money, if you are going to settle the amount, within 10 days, I'll give 2% discount. So, I am attracting the customer to settle the money at the earliest so that my liquidity portion, company's liquidity portion going to increase, improve. Understood or not? All of you? Now, 2% represent what? 2% represent what?
Discount that will
Cash
be
discount.
Discount. You know, very good. There are two discounts are there. One is called a cash discount, another one is called a trade discount. One is called a trade discount, another one is called a cash discount. Okay? Sukumar, what is the difference between trade discount and a cash discount? What is the difference between trade discount and a cash discount?
Trade discount will be given on volume basis.
Okay. Which one?
Cash discount
Hmm.
will be given on transaction basis.
Little better answer. Yes. Others also. Aishwarya. K. Aishwarya.
Sir, trade discount is given at the time of sales, sir. Cash discount is given at the time of the payment.
Very good, Girija. Trade discount. Trade discount normally we come across in many places as a customer. We are buying the product. Suppose we are going to purchase during Diwali purchase. I am going to buy. Assume I am going to Pothys. I want to purchase the product. After buying saree for my wife, total bill amount comes to other items and all purchased. Total bill amount comes to 3,700. In that cash counter, they'll give advice. What advice? You may also come across.
If you buy another saree, you can get this thing free.
So he will give the advice. What advice? Sir, your bill amount 3,700, sir. You won't enter the bill. Sir, if the bill amount cross 4,000 and above, or if you were touched 4,000, you will get 10% discount, sir. Am I right? Some discount policy you will tell. Immediately, as a chartered accountant, will calculate. Already how much you have to pay? 3,700. How much extra I have to pay?
300.
300. If I am going to pay 300, it becomes 4,000. Leah? Then how much the discount?
10%.
10%. Therefore, how much the savings?
400.
300 pay panna, 400 benefit. It's a beneficial for me or not? Yes or no? So, based on this calculation, you want to buy something. Any product will be there for 300 rupees only. Clear? So, you land up with buying another 1,000 rupees the product. Am I right or not? Indirectly, they are influencing to buy the product from this particular place itself. Rather what? I have purchased saree for my wife. Anyway, I have to purchase dress for me. Instead of going to some other shop, I may have the plan to buy it in some other shop. I want to buy it here itself. So then I can get some discount. Am I right or not? So indirectly, they want to improve the turnover. Sales they want to improve. For that purpose, they'll give some discount. So over and above 2,000. Now what is 2,000? Nothing. Am I right? Over and above what? 5,000, 4,000, 10% discount. Suppose above 6,000, okay, you will get what? 20% discount. Say we tempted to buy one. Why don't you buy all the product here itself so that we can get 20% discount? No. Clear? So they want to improve the turnover. For that purpose, discount they will provide. That discounts are called trade discount. Trade the under discount. That's why it's called trade discount, to improve the trade, improve the sales. But here we are going to discuss about cash discount. Rightly, Mahendra has pointed out. What is called cash discount? Cash discount applicable only at the time, only for the purpose of one credit sales, for the purpose of repayment, for the purpose of inducing the customer to pay well in advance. We are going to provide cash discount. Normally 40 days credit period, net to 40. But if you are going to settle well in advance, within 10 days you are going to settle, you can get 2% discount. At least part of the customer may going to pay the money so that I can get the cash at the earliest. Understand logic or not? That is called one cash discount. Now coming back to original schedule. Now understood the terminology 2 by 10 net 40? All of you?
Yes, sir.
Yes.
Yes, sir.
Very good. Now we move to next one. We are in credit granting decision. Whether you have to grant credit or not, that is what you are worrying. For that, we have to do one cost benefit analysis. What is the cost with respect to granting credit? What is the benefit for the purpose of granting credit? Girija has pointed out benefit represents incremental sales. But if I am going to grant credit, sales will get increased or not? Definitely will get increased. There is no doubt at all. Am I right? But increasing sales alone is not a criteria. For example, in Chennai, T-Nagar is there. Am I right? In platform shop, they have decided because of the Diwali season or Sankranti season, they want to provide credit sales. Today you can buy, on or before 1 week, you can settle the money. Who is granting credit? Who is following the policy? Platform shop. then will the sales will get increased or not?
Yes.
It will increase, sir.
Increase.
Yes, sir.
Definitely all the shops are stock out, am I right? But anybody going to pay the money?
No.
Anybody will repay the money? Nobody will repay. Am I right or not?
No, sir.
Therefore, increase in sales alone is not the criteria. Ultimately, what is important?
Recovery.
Covering the money.
Increase in profit is the criteria. Ultimately, before granting credit, how was the profit? After granting credit, whether profit increase or not. Ultimately, businessman point of view, take home profit is increased or not. That only you have to worry. Am I right or not? Therefore, here benefit represent one incremental profit. Benefit represent profit. Are you with me or not? All of you.
Yes, sir.
So one hand benefit nothing but profit has to increase. Another hand, we have to incur a cost. Here we are going in ICA material, we are having two important costs they have mentioned. Based on that only the frequently asked questions are there. What are all the costs if I am going to grant credit?
Opportunity.
Credit sale panna enna cost to the company ennappa?
Opportunity.
Yes, Pooja. Bad debts yaar sonna pannonu yaro. Somebody said opportunity cost. Who said? Kadambari.
Yes.
Okay, yes. The second one is called one opportunity cost. Okay, two things are there. One is bad debts, another is called opportunity cost. Now, bad debts unavoidable one, right? One or two customers, they may not going to pay 1% or 2%. Whenever I'm going for the credit sales, credit candidation, I have to mentally have to prepare for some bad debts. Some normal loss will be there. We can't expect all the customers are genuine customer. Okay. Some customer like Girija may not going to pay the money also. Am I right or Girija? Now, next one. Another one is called the what? Opportunity cost. Here, what is called the opportunity cost? Kadambari, can you please tell me what do you mean by opportunity cost?
Sir, if the customer has paid the money right then itself, it could be used for other purposes.
Please have a big hand. Very good. Priyanka, clap panna maata. If you are going to settle the money now itself, I can use it for some other purpose. That opportunity I'm losing. That's why it's called opportunity cost. You know the definition for the opportunity cost, what you are studying in costing paper, right? Group 1 costing. Value of sacrifice made or opportunity forgone in accepting the alternative course of action. That is next best alternative is called opportunity cost. Now, if you are going to pay the money now itself instead of 40 days credit period, then I can use the money now, I can invest the money, I can get some benefit. That loss I am incurring because of granting credit. Or today 1 lakh worth of product I am selling, 1 lakh rupees worth of product. If you are going to pay the money 1 lakh today itself, I can put it in fixed deposit or I can put it in bank, I can get some interest. After 40 days, then I have to lose that interest. That interest component or return on investment component is called what? Opportunity cost for me. Understand? All of you? Therefore, we have discussed two costs. What are the two costs? Two costs discuss.
Bad debts
Bad
and
debts,
One is called
Bad debts and opportunity.
opportunity cost.
and one benefit. What is the one benefit?
increase in profit.
Increasing profit. Am I right? So benefit is greater than cost means we can grant the credit. The benefit is not greater than, benefit is less than what cost is high, benefit is less mean we don't need to grant credit at all. Understand? Are you with me? Now,
Yes, sir.
credit granting decision. Can you note it down? Credit granting decision. That is whether credit sale is viable or not. That is called credit granting decision. That is whether credit sale is viable or not. Before granting credit, we have to do cost benefit analysis. We have to do cost benefit analysis. Benefit represent incremental profit because of credit granting decision. Incremental profit because of credit granting decision. Underneath, you can note it down. Sales minus variable cost is equal to, underneath, you can note it down. Sales minus variable cost is equal to, what is it called? Sales minus variable cost is called what, Kanna?
Contribution.
Contribution.
Contribution. Less fixed cost is equal to, less fixed cost is equal to, what is it called?
Profit.
Profit. Okay. Are you with me? Good. Now, next line item we're going to be down. Notes. Next line item we're going to be down. Note. If fixed costs remain constant, irrespective of the credit period, if fixed costs remain constant irrespective of the credit period, then fixed costs are irrelevant costs. Fixed costs are irrelevant costs for decision making. Therefore, contribution is itself considered as benefit. Contribution is itself considered as a benefit. Understand? Note number 2. If there is a change in fixed cost, due to change in credit period, then fixed cost also relevant cost. Fixed cost also relevant cost for decision making. Therefore, profit is the criteria for decision making. Profit is the criteria for decision making. Understood? So in examination, credit policy will be there. Okay, credit granting decision, 30 days credit, 40 days credit, 80 days credit, and 120 days credit. Which credit policy is preferable? They'll ask. In this juncture, you have to do cost to benefit analysis. Benefit represent in general incremental profit. Fixed cost irrespective of the policy to remain constant means it should be supposed to be constant. Right? General constant. If it is constant mean, then contribution itself sufficient. Sales minus variable cost contribution. Where we are getting more contribution, you have to verify. Suppose fixed cost also changed because of what credit granting decision. Then fixed cost also relevant cost. Then sales minus variable cost is equal to contribution minus fixed cost is equal to profit. Profit is a benefit for you, not contribution alone. Got the idea or not? Because many students getting confusion. Few problems they are taking contribution as a benefit, and a few problems they are taking profit as a benefit. Student getting the confusion. Why profits is a criteria for one problem, another problem is why contribution. Now you got the clarity? All of you. Next. Next point you can note it down. You know cost. Enna cost பார்த்தோம்? Two costs we come across. What and all?
Bad debt.
Bad debts and opportunity cost.
Okay. With respect to bad debts and opportunity cost, first, bad debts has to be calculated. Bad debt has to be calculated based on sales, percentage on sales. So in examination, they'll give the percentage. 40 days credit period, 5% is the bad debts, expected bad debts. In case of 60 days credit period, 7% is the bad debt. 120 days credit period, 10% maybe the expected bad debts. That percentage 5 or 7 or 10 you have to apply on sales turnover. Apply on. Or if you are not on turnover, you have to apply. Are you comfortable? Next. Next point. Another cost. What are the next cost you have to discuss? Benefit you have discussed. Am I right? Cost number 1 you have discussed. What are the next cost? Opportunity cost. With respect to opportunity cost, note it down. Opportunity cost lies in the Ruba, noting down or not? Yes. Opportunity cost lies in the cost of debtor. Cost of debtor. Okay. For this purpose, if fixed costs remain constant, then we have to consider variable cost alone for the purpose of computation of cost of debtor. Whereas, if fixed costs also changes or change, if fixed costs also change, then both variable cost and the fixed cost you have to consider. Both variable cost and the fixed cost you have to consider for the purpose of computation of cost of debtor. Janaki, understood? Mr. Sonu sir, comfortable? Good.
Yes, sir. Yes.
All are comfortable, Ganna? These are all the notes, you should be thorough. Ganna. Now, again, commonly committed mistake. Because few problems in institute material we are going to see for opportunity cost computation, they have considered only variable cost alone. Few problems they have considered both variable and fixed cost. Why? Depending upon fixed cost remain constant or not. Okay? These are all the points you are supposed to remember before solving the problem based on credit granting decision. So conceptually you should be strong first. All of you understood the concept? Yes or no, Ganna?
Yes, sir.
Okay? Good. Because every topic I have given what to study. If you are going to type what to study, you'll get what are the topics and what to study for the respective topic. So all the topics and what all the subtopic you have to refer. You have to pick. So in channel Excel you have given, right or not? So all topic level, all concept, all the concept will be thorough. Okay? So if you're thorough with it, now you are comfortable with respect to credit granting decision. So opportunity cost. When opportunity cost will come? If If you are not going to pay money, then only opportunity cost will come. Am I right? Pay pantana, there is no opportunity cost. I am granting credit. If you settle the money, there is no question of opportunity cost. If you are not settling the money, then only opportunity cost will come. If you are not settling the money still now, then you are going to be called the what? You know, பணம் கொடுத்து முடிக்கல, settle பண்ணல. Then you are going to be called the what? Respond. If you are not going to pay the money still, settlement is not over. When you are going to be called debtor.
Debtor.
பணம் கொடுக்காம பேர் என்னப்பா? Debtor. Okay. Therefore, remember that opportunity cost lies in the debtor. Or debtor la opportunity cost. All the sales opportunity cost won't be there. Am I right? Only in debtor, because debtor not yet paid. Therefore, opportunity cost lies in the debtor. But debtor is based on sale value or cost value. Debtor எப்படி கம்ப்ளீட் பண்ணிருப்போம்? Sales value or cost value?
Sales value.
Sales.
I sold the product, 1 lakh worth of product to Nityashree. She has not paid the money. Therefore, debtor, Nityashree debtor, worth of the debtor is 1 lakh. Am I right or not? So, always based on what? Debtor. Clear? Always based on debtor, that too based on sale value the debtor. Am I right? But with respect to opportunity cost, the actual cost is the opportunity cost. Opportunity cost lies in the cost of the debtor, not sale value of the debtor, because sales value includes your the profit. Are you able to follow or not? Therefore, sale value debtor is inclusive of the profit. Debtor is because debtor is based on sale value. Remove the profit, balance equal to cost of the debtor. In that cost of the debtor, you have to apply the opportunity cost. Now, got the clarity?
Yes, sir.
Yes, sir.
So, these are all the
Yes, sir.
things you have to remember with respect to one credit granting decision. All are comfortable with the concept behind credit granting decision?
Yes, sir.
Bob, can you please repeat the point with respect to bad debts? Okay, bad debts are okay. Bad debts we have to calculate on the based on sale value. Turnover கொடுத்திருப்போம். 40 days credit period, 80 days credit period, 100 days credit period. Turnover will be there. Accordingly, turnover going to get increased. Respective periods, bad debts will be there. Bad debts percentage you have to apply on turnover. Nothing but sales. Sales into normal computation. Sales into bad debt percentage is equal to bad debts. Percentage of bad debts is equal to bad debts. Comfortable?
Yes, thank you, sir.
So have these notes properly. Any problem, if you are going to solve credit granting decision, you have to remember the notes. You have to read what based on these notes only you have to solve. All are comfortable, Kanna? Good.
Sir.
Next போலாமா? Go to problem number
4.
4. Shall I go for fourth question? I am ready. Are you ready? யார் படிக்க போறான்? ஐஸ்வர்யா படிக்க முடியுமா?
Gamma Limited has a present annual sale of 10,000 units at rupees 300 per unit. The variable cost per unit is rupees 200 per unit and the fixed cost amount to rupees 3 lakh per annum. The present credit period allowed by the company is 1 month. The company is considering a proposal to increase the credit period to 2 months and 3 months, and the estimates are given below. Credit policy existing 1 month, proposed 2 months and 3 months, increase in sales 15% and 30%, percentage of bad debts 1%, 3% and 6%. There will be increase in fixed costs by 30,000 on account of increase in sales beyond 14% of present level and 60,000 on account of increase in sale beyond 24% of present level. The company plans a pre-tax return of 18% on investment in receivables. Calculate the most preferable credit policy for the company.
Go through the question quickly. Shall I start?
Yes, sir.
Credit granting decision, right? Statement of evaluation of credit policy. Statement of evaluation of credit policy. Underneath, எவ்வளவு பாலிசி கொடுத்துருக்காங்கண்ணா? 1 month, 2 months and 3 months ஆகுண்ணா.
Yes, sir.
Yes, sir.
Particulars 1 month, 2 months and 3 months. Credit policy 1 month, 2 months and 3 months.
Sir, under particulars or
No, particulars
1
1 month,
Okay.
2 months, column kana. Under the particulars, sales quantity. Under the particulars, sales quantity. One month, how much sales quantity kana?
10,000.
10,000. 10,000.
In case of 2 months, they said increase in sales 15%. அப்ப எவ்வளவு கண்ணா?
11,500.
Plus 15% is equal to
1,500.
11,500. Good. Similarly,
13,000.
30,000.
good. Kanna. Next, sales revenue. Sales revenue. What about the sales revenue kana?
30 lakhs.
30 lakhs.
30 lakhs. Next,
34.5 lakhs.
34,000. 34 lakh 50,000. Then 39 lakh.
very good, very good. Go on. $30 lakhs, 34 lakh 50,000 and 39 lakhs agana.
Yes, sir.
Yes, sir.
Good. Next, we are going to find out the benefit. Am I right? Less variable cost. What about the variable cost?
200 per unit.
20 lakhs, 23 lakhs, 26 lakhs, sir.
Good. $20, $23, $26. Balance is called contribution. Am I right? Contribution for the current situation, how much?
10 lakhs.
11 lakh 50 and 13 lakhs.
11 lakh 50,000.
Very good. 10 lakh, 11 lakh, 50 and 13 lakhs. I don't know.
13 lakh.
13 lakhs. Good.
Yes, sir.
Okay. Next. In this problem, fixed cost remain constant or varies, Kanna? The problem
Varies.
Varies.
fixed cost varies. Therefore, fixed cost is a relevant cost or relevant cost.
Relevant.
Relevant cost.
Therefore, here benefit represent cost. Chalamatiya, benefit represent what?
Profit.
Profit is called benefit. Am I right or not? Remember my notes. Okay, refer my notes. So less fixed cost. Less fixed cost. Current situation, what are the fixed cost? How much
3 lakh.
given?
3 lakh.
3 lakhs.
Is it given?
Yes,
Yes,
sir.
sir.
Yes, sir.
Yeah, given 3 lakhs given in this question. Am I right? When fixed cost going to vary?
Per second.
Sales increase beyond 14%.
14%.
14%. Yes, second 2 months credit itself 15% directly. How much increase then?
30,000.
Lakh 30.
So in 2 months credit policy, 3,30,000.
3 lakh 30,000.
Good. Similarly, 3 months credit policy,
3,60,000.
3 lakh 60,000.
3,60,000. Specific information is there. Am I right? Balance is equal to profit. Kanna. How much the profit?
7 lakh.
7.
7 lakh, 8 lakh 20,000 and 9 lakh 40,000.
Okay. All of you got it?
So,
So profit 7 lakh, 8 lakh 20 lakh.
8 lakh 20,000.
Lakh 20,000.
20 and then
9 lakh 40.
40. All of you check it up, check it up, check it up, check it up, check it up. Double underline, double underline, double underline. Profit over now. Am I right? That is a benefit for you. So benefit. Now we have to go for cost. Am I right? We are doing cost benefit analysis. Benefit side over. Now we have to move the cost. What are all the two costs I said? Enna cost sonnanga?
Opportunity cost and bad
Bad
debts.
debts and opportunity cost.
The cost and then
Bad debts.
first bad debts photo. That is easy. Bad debts. Always you have to calculate based on percentage. For the current situation, bad debts 1% given in this question. Am I right?
Yes, sir.
1% on sales comes to how much?
30,000.
30,000.
Hmm. Similarly, 2 months credit policy, 3% on sales value.
1,03,500.
1 lakh 3,500, 2 lakh 34,000.
34,000.
It's 2 lakh 34,000.
34,000.
2 lakh 34,000. Cost over. Any doubt in cost, Anna? That is cost with respect to bad debts over. Am I right? First cost over. Any doubt on bad debts? All
No,
are
sir.
comfortable? No need? Noting down or not?
Yes, sir.
Good. What are the next cost? Opportunity cost. What lies in
Cost in the debtor.
Cost of debtor.
Cost of debtors.
debtor. First you have to compute debtor. Clear? Next column, debtor. Computation of debtor very easy. Kana. For 1 month credit policy, how much the sales we got it?
30 lakh.
30 lakh.
30 lakhs for the 1 year sales. Am I right? Up 1 month is the credit period. That's what for the debtor proportionately 30 lakhs divided by 12 into 1. Am I right? 1 year sale is equal to 30 lakhs. 1 month sales is how much?
250,000.
2 lakh 50,000.
2,50,000. Similarly, 2 months credits, how much the sales now?
34 lakh
34 lakh
50,000.
50,000.
34 lakh 50 is for 1 year sales. 2 months credit period is equal to debtors is equal to how much?
575,000.
Lakhs.
3 lakh 75. Similarly, last one.
9 lakh 75,000.
Huh?
9 lakh
9 lakh 75,000.
Okay, good. But we need cost of the debtor, not sale value of the debtor. Now we got sale value of the debtor, but we need what? Cost of the debtor. Cost represent what plus what cost?
Variable and fixed cost.
Variable and fixed cost. Say debtor is on sales value, we have to convert it to cost angle. Therefore, denominator sale value, numerator total cost. Am I right or not? So, cost of debtor, in particular system, you can note it down. Formula with respect to cost of debtor. Debtor divided by sale value into total cost. Debtor divided by sales value into total cost. Understood? Now, with respect to first 1 month credit, how much the debtor you got in?
2 lakh
2 lakh
50,000.
50,000.
50,000 divided by sales value 30 or 30 lakhs into total cost. Variable and fixed cost how much?
23 lakhs.
23 lakhs.
So divided by 30 into 23.
1,91,667.
667.
1 lakh 91.
91,667.
667.
Yeah, Prem Kumar, you can do in that angle also. Yes. Both of you will get the same answer only. Since computation of debtor are based on sales, we have to go with the sales is the preferable format. 1,91,000 plus, you got it. Similarly, for the second one, debtor divided by total sales value into total cost.
4,38,333.
Very good.
Seven lakh 40,000.
Got it. 7 lakhs over the
Yes, sir. 7,40,000.
Okay, 7 lakhs 40,000. Now you got cost of debtor. So kindly highlight cost of debtor only. Many students will commit the mistake now. Okay, are you comfortable now? In that cost of debtor only, opportunity cost is there. Next line, opportunity cost. Opportunity cost. What is the percentage of opportunity cost given in this question? Return on investment in opportunity cost. 18% given in this question. Am I right? So, opportunity cost at the rate of 18%. 18% on the cost of data. Instagram the vacation.
Sir, 34,500.
34,500 for return on investment. What is the opportunity cost? Okay.
Yes, sir.
Opportunity.
34,500. Check it up, Kana.
Yes, sir.
Good.
78,900.
78,
900.
900. Very good.
1 lakh 33,200.
1 lakh
33,200.
33,200. Very good, very good, very good. All of you kindly check it up. சரியான்னு பார்த்துக்கொள்ளரும்.
Yes, sir.
Kadambari, read one more time. Others kindly check it up.
Opportunity cost 1 month 34,500, 2 months 78,900, and 3 months 1,33,200.
Got it? All of you got it or not?
Yes, sir.
Good.
Yes, sir.
What next, Kanam? We have to identify net benefit. Am I right? Net benefit is equal to benefit minus cost 1 and cost 2. Benefit is profit minus cost 1. What is the cost 1? Bad debts. And the cost 2?
Opportunity cost.
Opportunity cost. Yes. Any difficulty?
Second is best.
Kanappa? What, Kanam?
6,35,500, sir.
6 lakhs?
35,500.
First one. Okay. 6,35,500.
2 months 6,37,600.
6,37,000.
600.
And 5 lakhs.
5,72,800.
2,800.
Very good. Very good. Sharuba, repeat one more time. All of you kindly check it up.
Net benefit 1 month 6,35,500, 2 months 6,37,600, 3 months 8,72,800.
All of you got it?
Yes, sir.
Any doubts? All are comfortable?
Yes, sir.
Good. Any difficulty with respect to credit granting decision? Easy, manageable,
Yes, sir.
satisfied.
Yes, sir.
Prem Kumar is asking for the third one. 3 months credit, how much? Answer?
5,72,800.
5,72,800.
5,72,800. Aditya got the answer. Rajastri.
Yeah.
Good.
Yes, sir.
Sonu sir, manageable.
Yes.
Good. Shall we go to the next one?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Next. Go to the next topic.
Cost of capital structure.
Come on. I am ready. Are you ready? Are you ready, Kanu?
Yes, sir.
Yes, sir.
Yes, sir.
Good. Okay, any further doubt you can ask? Otherwise, I can go to next one. Next பண்ணலாமா? வேற ஏதாவது டவுட் இருக்கா?
Next query.
Sir, we have to interpret the answer also. Which is the best
Which is
policy?
best gonna
Second one.
conclusion you have to write. Right? 2 months credit policy is preferable. That conclusion you have to write. Yes, come. The requirement of the question, எவ்வளவு மாசம் credit period கொடுக்கலாம்? 2 months we are getting more benefit, am I right? So 2 month credit policy is preferable. Cost of capital. Concept became cost of capital. The entire financial management. Cost of capital alone. Little formula oriented. Yes, of course, concept is there, but you have to remember the formulas also parallelly. Other topics are substantially stuffed with the concept. Here, little leverage is there. You have to remember the formula also equivalently. Cost of capital. Name itself implies its character. You know, in basic concepts, there are two basic objects are there in the financial management. Clear? What are all they? Prem Kumar, tell me, what are all the two basic? Yes.
Sir, procurement of fund and effective utilization of funds.
Okay, procurement of fund and effective utilization of fund. Am I right? So kindly slap yourself quickly. It's a commonly committed mistake. That's the reason I asked the question. Two basic objects are different. Two basic aspects are different. In general, students used to interchange the answer. So you have to be very careful. Understood? Otherwise, double the normal loss. 6 mark or 5 mark also loss. Whatever the time you spend, that is also loss. Am I right or not? So objectives of financial management, profit and wealth maximization. Aspects of financial management, procurement of fund and effective utilization of fund. Understood, Kanagrijan? Now, aspects of financial management also called what? When yesterday we have discussed. Aspects of FM also called
Functions of financial management.
Functions of financial management.
functions. Okay. Have you referred in the ancient material or not? Have you referred ICA material? No time. Yeah. After exam, you can refer. Now, before you are going to procure the fund, first aspect, you have to procure the fund. Before you are going to procure the fund, we have to analyze 3 characteristics. They are the very first topic. 3 characteristics. What are all the characteristics of source of fund? What are all the
Risk,
Risk, cost,
Cost
control.
control.
risk, cost and control.
cost and control?
Yes, sir.
High risk goes to which fund?
Borrowed funds.
Borrowed fund. High cost goes to which fund?
Owned funds.
Own fund.
High control goes to which fund?
Borrowed funds.
Borrowed fund.
Okay.
Own funds.
Borrowed fund. So we have to see everything in company's point of view, not in the investor's point of view. Okay. We have to see everything in what? Company's point of view. Are you with me or not? Now,
Yes, sir.
with respect to the procurement of fund, effective utilization of fund, all those things. Cost, risk, cost and control we have come across. With respect to risk, cost and control, if you are going to see risk, cost and control, in cost of capital, we are going to discuss about cost aspects. That's why cost of capital comes into picture. Ilya? Cost aspects we are going to discuss now. Suppose you need money and you are going for loan வாங்கலாம்னு போறேன். For Prem Kumar, 2 banks are ready to give for the loan. Okay, Kanna? First bank, they are ready to give the loan at 18% interest. Interest on loan comes to 18%. In second one, they are ready to give for 19%. Which bank will prefer, Ganna?
First
18%.
18%.
First bank.
18%.
Why?
Yes, sir.
Percentage is less, interest is less.
Interest rate is less.
Interest rate.
So, I want to procure the fund. I need fund. If I need fund, first I have to verify what? Cost of the fund. Am I right? Interest rate and patham. Are you with me or not? Based on cost only, I can be the person to identify which fund is preferable. Are you able to follow? As usual, good response.
Yes, sir.
Yes, sir.
So, the fund, what is preferable is purely based on what? Cost involved for the
Cost
sale.
of procurement.
Based on cost only, I can identify whether company A is preferable or B is preferable and all. Or bank X is preferable or Y is preferable. It's purely based on cost. Where I am going to get less cost, that option is preferable. That's why before procurement of fund, we have to analyze the cost of the procurement. That's the reason if you are going to see the institute topic, it's a chapter itself. Cost of capital, thereafter capital structure, also called the capital structure theory will come. Cost தெரிஞ்சாதான் we can frame the capital structure. So cost is important. Thereafter you have to go for capital structure. Are you with me?
Yes, sir.
Comfortable?
Yes, sir.
Yes, sir.
You know procurement of fund. What are all the way in which they are going to procure the fund, Kanna? What are all the way in which they are going to procure the fund?
Own fund and borrowed fund.
Own fund and borrowed fund. Under own fund, what are all that in own fund?
Equity and
Equity
preference.
is there.
Equity
Share
share
capital.
Next,
Share capital.
preference share capital. Next,
Retained earnings.
long-term retaining. Next, long-term loans and
Debentures.
debentures. These are all the various ways are that to procurement of fund. Or not? These are all the various ways are there. Now, yes, issuing shares. Yes, Kanna. So these are all the various ways of procurement of fund. We have to identify, we have to analyze in this topic. The concept behind this topic is what? I'm going to explain the concept only. Okay? The concept behind this topic is what? What are the costs involved for the purpose of this procurement? That is what you are going to learn. Are you with me? Cost involved for procurement. With respect to cost involved for procurement, cost in clear? How much the cost involved? How to identify? It's purely based on percentage. Cost of capital, you have to express in terms of percentage. Interest 1 lakh, 5 lakhs, 20,000, there is no meaning at all, am I right? You have to express in terms of 18%, 12%, 15%. Clear? Percentage. Therefore, the entire cost of capital, the cost of capital itself, you have to express in terms of percentage. Therefore, all the formula you have to multiply with what? To convert the percentage, you have to multiply with what?
100.
So, $100 multiply. Now, you said various ways in which you have to procure. Nothing but source of procurement. With respect to source of procurement, every source, nobody is going to give the fund at a free of cost. Clear? We have to pay something in return. That is called the cost. Own funding, you have to pay dividend. Borrowed funding, you have to pay interest. Therefore, the coverage of topic is what? Own fund, borrowed fund, cost. Therefore, note it down. Cost of capital, kindly note it down. Cost of capital, it represents cost incurred for the purpose of procurement of fund. Cost incurred for the purpose of procurement of fund are known as cost of capital. Cost incurred for procurement of fund. Cost of capital has to be expressed in terms of percentage. Next one. Cost of capital has to be expressed in terms of percentage. Okay. Next. Coverage. Coverage. Segregate into three parts. Coverage segregate into three parts. One is cost of debt fund. Cost of debt fund. Second one, cost of preference shares fund. Cost of preference shares fund. Next, cost of equity. Cost of equity. Are you with me? Then cover all the three. Debt fund, preference share, equity. Cover all the three. That is called overall cost of capital. Combination of all is called overall cost of capital. Okay. So in this segment, our coverage is for debt fund cost we are going to compute separately. Equity fund cost we have to compute separately. Preference shares funds shares fund cost we have to compute separately. And the company as a whole, debt fund, own fund, borrowed fund, combination of all will be there, right? And the total fund cost we have to compute separately. That is called overall cost. Are you with me?
Yes, sir.
Four different segments we have to discuss. What are the first one?
Cost of debt fund.
Cost of debt.
Debt fund.
First one, note it down. Cost of debt fund. Before you are going to solve the problem, you should have the proper notes. Okay, concept is to be thorough. Cost of debt fund. It represents cost incurred for the purpose of procurement of fund. Cost incurred for the purpose of procurement of fund by way of cost incurred for the purpose of procurement of fund by way of what?
Debentures.
Debentures slash loan. Debentures slash loan. Good. Kavita, noting down or not?
Yes, sir. Noting, sir.
Good. Here cost represent payment of interest. Cost represent payment of interest. Cost of debt is denoted by way of cost of debt is denoted by way of Girija, what?
KD.
KD, your name only. Okay, KD. See, name what Aishwarya write only. Cost of debt is denoted by way of KD. What Kadambari, sleepy mood. Like that. Then computation segregated into two parts. computation segregate into two parts. One is irredeemable debt. Another one is redeemable debt. One is irredeemable debt, another one is redeemable debt. Under irredeemable debt, KD is equal to, don't write your name, okay? KD is equal to interest into 100 minus tax rate divided by NP. Interest into 100 minus tax rate divided by NP. Under redeemable debt, KD is equal to interest into 100 minus tax rate plus RV minus NP divided by N. RV minus NP divided by N whole divided by RV plus NP divided by 2. I'll repeat once again. In case of redeemable debt, interest into 100 minus tax rate plus RV minus NP divided by N whole divided by RV plus NP divided by 2. Where RV represents redemption value. NP represents net profits of issue. Q income, net income. N represents number of years. Okay. Next. In numerator, you come across RV minus NP divided by N. Am I right? That is called average premium, popularly called average premium. In denominator, you come across RV plus NP divided by 2. That is called average liability. What is it called? Average liability. Like opening stock plus closing stock by 2 Mari. Simple average liability. Understood? Next point is supposed to remember note. Dear students, in examination, they won't specify. Okay. Anusha, this particular problem is based on redeemable debt or irredeemable debt. They won't give any information. Because depending upon redeemable or redeemable, formula also going to vary. Am I right? Yes. So how to identify? You should not choose the wrong formula. Am I right? Whenever year of redemption given in this question, you have to solve the problem by way of redeemable debt. Year of redemption is not given, then you have to use irredeemable debt. Note it down. If year of redemption, noted the point. If year of redemption is given in this question, we have to solve the problem by way of redeemable debt. Next, if year of redemption is not given, we have to solve it by way of irredeemable debt. Understood, all of you? In examination, in question paper, they won't give any specific information. We have to identify based on available data. Accordingly, you have to write the formula also. Are you comfortable? Good. So with respect to coverage, 4 things I have told. First one is cost of debt. What the second one?
Cost of preference share fund.
Second one, cost of preference share. The next concept, cost of preference share. It represents cost incurred for the purpose of procurement of fund. Cost incurred for the purpose of procurement of fund by way of preference share capital. Procurement of fund by way of preference share capital. Here cost represent payment of preference dividend. Cost represent payment of preference dividend. Cost of preference share is denoted by way of KP. Cost of preference share is denoted by way of KP. Okay. Computation segregated into 2 parts. Computation segregated into 2 parts. One is irredeemable, another one is redeemable. Irredeemable and redeemable. Under irredeemable, KP is equal to preference dividend divided by NP. Since you have to express in terms of 100, you can multiply with 100 also. Okay. Preference dividend divided by NP. Next, redeemable. KP is equal to preference dividend plus same formula. RV minus NP divided by N whole divided by RV plus NP divided by 2. Okay. Are you comfortable? Good. You know, three characteristics of source of fund: risk, cost, and control. Am I right? High cost goes to which fund?
Own fund.
Own fund.
Very good. Janagi, can you please tell me why high cost goes to one fund? What was the reason? Very good response. Pooja, Vinita, why high cost goes to one fund? Kana? Mr. Sonu.
Sir, the dividend may vary.
Okay. Two main reasons I said. One is dividend expectation of the shareholders are always higher than interest expectation of the loan holder. The second one, what is the second important thing?
Tax shield will be
Yes, high
available.
interest. Yes. No, high interest, not a correct answer.
Tax shield will be available.
Tax shield. That is important. Clear? With respect to tax matter. Right? So, tax Possibly. With respect to tax, tax benefit will be there in which fund?
Borrowed fund.
Borrowed fund.
Not in the own fund. Am I right or not? Okay. So Santosh, listening or not? Tax benefit or tax shield is there in the borrowed fund. Tax benefit is there for the borrowed fund, not for the own fund. That's why if you are going to see the bottom formula, previous one, debt fund formula, if you are going to see, interest into 100 minus tax rate. Am I right?
Yes.
Whereas
So-
here, preference dividend, KP, preference dividend divided by net process of issue as it is. There is no tax benefit at all. Am I right or not? Therefore, the difference between KD and the KP is what? The tax benefit only missing. Am I right? Now you got the idea? Otherwise, both are same only. Next. So here also, in examination, they won't specify whether redeemable or redeemable. Possibly, how to identify whether redeemable or redeemable? Preference share is redeemable or redeemable. How to identify?
Repayment years will be given.
What Manna?
Redeemed after so and so years.
Yeah, year of redemption given in this question means we have to solve the problem by way of redeemable. Else it is called irredeemable. Accordingly, you have to solve the problem. Are you comfortable? Good, good, good. So, cost of debt to over, cost of preference shares to over. Am I right? What is the next one? Next one.
Equity.
Cost
Yeah.
of equity.
Equity.
Third one is called cost of equity. Okay. Now, based on the concept only, all the problems are there. Refer ICA material or practice manual or past exam question suggestion answer, MTP, RTP, everything based on what? This particular concept only. Now, cost of equity. Note it down. Cost of equity. It represents cost incurred for the purpose of procurement of fund by way of cost incurred for the purpose of procurement of fund by way of equity share capital. Here cost represent payment of equity dividend. It is denoted by way of KE, denoted by way of KE. Computation segregate into 5 parts. Computation segregate into five parts. ஐஸ்வர்யா பயப்படாம எழுது. ஜுபாயிண்ட் அப்படிங்க. பிரியதர்ஷினி எக்ஸ்பிரஸ் பண்ணல, ஐஸ்வர்யா எக்ஸ்பிரஸ் பண்ணிட்டா அவ்வளவுதான். பிரியதர்ஷினி எப்படி? Segregate into 5 parts. One is income approach. Second one is dividend approach. Income approach, dividend approach. Next, growth approach. Growth. Next, realized yield approach. Realized yield approach. And last one is CAPM approach. CAPM approach. Okay. What was it? CAPM stands for what? Chartered Accountant, Prime Minister.
Capital asset pricing model.
Very good, very good. Priyadashini always great. Premkumar also. CAPM stands for Capital Asset Pricing Model. Capital Asset Pricing Model. Understood? Formula note பண்ணுங்க. Income approach, formula for the income approach. KE is equal to EPS divided by MPS. Not EPS by OPS. Okay, EPS, earning per share divided by MPS, market price per share. Dividend approach. DPS divided by MPS, dividend per share divided by market price per share. DPS divided by MPS. Okay. Next. Growth approach. DPS divided by MPS, dividend per share divided by market price per share, plus G. DPS divided by MPS plus G. G common factor form. Denominator, you should not put it in denominator. Okay. G for
Growth
Growth rate.
percentage.
growth. I will tell gold winner. Not put must 3. Next. Realized yield approach, same formula. DPS divided by MPS plus G. In realized yield approach, G growth represent past growth, already incurred growth. Whereas previous one growth represent future growth. That difference not required for intermediate level. Just you can remember the formula alone. Okay. And CAPM approach. Capital asset pricing model. KE is equal to RF plus beta into RF plus beta into RM minus RF. RF plus beta into RM minus RF. RF represent risk-free rate of return. RM represent market rate of return. And beta represent risk factor. RM minus RF is popularly called risk premium. RM lend RF kashitona, the balance is called what? Popularly called risk premium. Sometimes instead of giving RF, RM separately, they may give risk premium also. So you should be in the position to know how to manage. Okay. So easy way to understand. You are having fund, money retail. You want to invest the fund. Okay. Ashna, can you please tell me? You want to invest the fund. Option A, post office, in savings you can invest. Option B, mutual fund. Which one is the safest one?
Post office.
Anu, which one is the safest one?
Post office.
Post office.
Safe. Am I right? No other doubt. Where will get more return? Mutual funds or post office?
Mutual funds.
Now we got the idea or not? Now, mutual fund, for example, okay, they are giving 10% return. Post office, they are giving only 4% return. Mutual fund is a market value RF, okay, RM, okay, 10%. Whereas risk-free rate of return without risk, you'll get 4%. 10 minus 4 is equal to 6. Because of you are accepting risk, they are giving premium. Are you with me or not? Now ready to accept premium or risk accept. I'm ready to invest the money in what mutual fund or private security. Then because I'm accepting the as an investor, I'm accepting the risk. They are giving some extra premium. That's why it's called risk premium. RM minus RF is called risk premium. Now got the idea?
Yes, sir.
Yes, sir.
So without knowing this type of concept, mere solving the problem utter waste. They are only keep on, they'll give the twist. On examination, they ask the RF they are given, beta was given, risk premium they are given. Student got confused what to do because they need RF, RM. Are you able to follow or not? RM minus RF net answer was given. So if you don't know the concept, you can't the question to solve the problem itself. Are you able to follow or not? Clear? Similarly, once they are given the question, it's a small question down. Okay, they are given post office savings, some amount, private, some discount, some rate, and the beta rate given. Student got confused what to do because they don't know what is called RF, what is called RM. They are not definition. They are not studied properly. They don't know how to solve the problem. Understand? So RF na risk-free rate of return. What is called risk-free rate of return? Little concept. Clear? Just quickly concept. What is relevant for examination? At least you're supposed to have. Right or not? No got the clarity?
Yes.
Yes.
What is the last one you have to discuss? Last concept.
Weighted cost of capital. Overall cost of.
Company's point of view, cost cost of the capital. Capital represent what? Equity share capital, fractional capital, long-term loan, debenture, combination of a company total capital employed how much? For that, how much the cost incurred by the company? Own fund and borrowed fund, how much the cost incurred by the company is called overall cost of capital. Understood? Not you know. Overall cost of capital. It's popularly called WACC, weighted average cost of capital, WACC. Yes, I'll explain later. Okay. Weighted average cost of capital. It represents overall cost incurred by the company for the purpose of total procurement of fund. By way of equity share capital, preference share capital, long-term loan, and debenture. So combination of what? Here cost represent payment of interest and payment of dividend. Payment of interest and payment of dividend. Weighted average cost of capital is denoted by way of WACC is denoted by way of K. It's also called overall cost of capital, also called weighted average cost of capital. Okay, KO. Harsh Kotari, can you please tell me? Lower the KO is preferable or higher the KO is preferable? Take your one time, tell tomorrow, okay? Rajastri. What is preferable? Yes, Mohammed. So, lower than KO is preferable. Okay? Overall cost should be minimum. Lower the weighted average cost of capital is preferable. Understood? Next. Next point you have to remember. With respect to computation of WACC, there are two methods are there. There are two methods available. Two methods are there. One is book value method. Another one is market value method. Book value method and market value method. So yesterday I given the homework also, right? What to study. Okay. In that what to study, cost of capital, this all you have discussed, right? What and all you have to study it. Have you noted or not?
Sure.
Yes. So book value method and market value method. Next note. In market value method, dash is not applicable. This apply agadu. This varadu. Dash will not arise.
Retained earnings not.
Very good. That's another one. Who told? So cost of retained earning will not arise. In market value method, KR, cost of retained earning, will not arise. Okay, Prem Kumar. Next important point. In general, KR is equal to KE. That is cost of retained earning is equal to cost of equity. Okay. In general only. Nothing but KE compute only. 16% is the KE, cost of equity. Same 16% you have to take for cost of retaining also in general. Next, however, most important point. However, if shareholders' personal tax is given in this question, kindly highlight most important point. If shareholders' personal tax is given in this question, then KR is equal to KE into 100 minus the personal tax rate. KR is equal to KE into 100 minus tax rate. Can you put a star mark in that? Important point. Okay. Next. Another commonly committed mistake is DPS to be MPS plus growth per only in KE computation. DPS to be MPS plus G. You may have come across, you may have the doubt also. Few problems, DPS plus growth to be MPS plus growth. Few problems, DPS to be MPS plus growth. You will got confused, right? One problem, growth double time, other problem only one time. How many of you got this confusion?
Yes, sir.
Confusion already vanish. We won't go to the next step to understand, or you won't get the clarification. Again, the doubt will come only in example. Right or not? The specialty of the CA examination is what and all we skipped, that only will come for the exam. Right? What and all you omitted in the concept van on once you go, standard costing that time only the standard costing will come. So which area you skipped, that area only will come. Right or not? That is what our fate, no? Clear? So you should not leave any concept on it. That's why concept is important. So few problem DPS plus growth divided by MPS plus growth வந்திருக்கும். Numeratorly growth add பண்ணிருக்கோம். So when, any idea? Listen here, whenever DPS for the last year given in this question, then for the purpose of KE computation, numerator DPS is equal to DPS plus growth. Last year DPS plus growth divided by MPS, and the common factor add growth. Are you able to follow or not? Whenever DPS for the current period itself given means normal formula DPS plus MPS plus growth. Are you able to follow?
Yes.
So these are all the things you should be very careful. That's all the area we used to commit the mistake. Are you with me? That's the reason we have spent this much time for the purpose of learning the concept. So I'll sum up what and all you have learned with respect to cost of capital near solving the problem at our base without knowing the concept. Solving the problem very, very easy, for max only. So how to derive the formula, what is the concept behind the formula, that and all more important. So till now we have discussed with respect to cost of capital. Cost incurred for the purpose of procurement of the capital is called the cost of capital. Here, lower the cost of capital is always preferable. With respect to cost of capital, the coverage should be what? Cost of debt fund, cost of preference share fund, cost of equity fund, and overall cost of capital. That is called weighted average cost of capital. Any doubt? All are happy?
No, sir.
Yes, sir.
Yes, sir.
Conceptually happy, Kanna?
Yes, sir.
Good, good, good. Next. Shall I go for some practical problems also? Good response.
Yes, sir.
Yes,
Yes,
sir.
sir. 5.
Yes, sir. Yes, sir. Want any small break or we'll continue? Break. Project. Want any small break?
Yes, sir.
Yes, sir.
Relax and come back. We'll continue.
Okay, sir. Thank you, sir.
Thank you, sir.